Hi, everyone, and thank you for joining our webinar today on deciphering Ginnie Mae approval and delivery. Looks like we've still got a couple people joining, so we'll get started at 11:02. Thank you. All right, thanks everybody for joining us. Looks like we've got a good consensus here for our webinar on deciphering Ginnie Mae approval and delivery. Brett, take it away.
Hi, everybody. My name is Brett Sinnott. I'd like to thank everybody first and foremost for jumping on the call today. I know times can be busy, so I appreciate you taking time to listen to what we've got to present. Quick background on myself. I started in 1997 at 15 years old at a private lender. At the time, they had 33 people, basically just a retail shop. I spent 21 years at the same company. In 2004-ish, I took over capital markets and ran capital markets until roughly 2018. At that point, I stepped down and basically retired and moved to a small town with no stoplights. Kind of changed some things up, just life-wise. Could not kick the mortgage bug. Decided that MCT would be a fun and enjoyable environment to work for because I had a different perspective and a different attitude towards everything. Eventually kind of worked my way back into the system, got revitalized, and have been here for about a year and a half now and continuing to plug forward. On the call, we've also got Andrew Rhodes. I'm sure many of you know him because he is the man, but Andrew, if you'd like to do your brief introduction, that'd be great.
Yeah. Hey, Brett. Thank you for that. And yeah, like Brett said, thank you guys for taking the time to be on the call today. Andrew Rhodes, Director of Trading, kind of work on managing the trade floor down in the San Diego headquarters. Really just been helping, multiple clients out with kind of the Ginnie process in terms of pooling and securitization. Brett has a really good understanding on what it takes to kind of go through the whole approval process. I think with that, Brett, if you want to start into it, I say go for it.
Definitely. So David, you want to go to the next slide? That'd be great. The basic goal of this whole thing is when I was doing the process way back when, I think we were maybe funding $100 million a month. By the time I left, we were funding well over $1 billion a month. So I was able to kind of acquire a bunch of knowledge in regards to the entire Ginnie process, start to finish. I know how cumbersome it can be and how many different systems are involved. So my goal was to create a sort of field guide or Cliff Notes version that someone new to the process can go to as a quick reference. And if needed, obviously dive further, but at least give you guys somewhere to start as far as how to approach Ginnie Mae and then how to deal with Ginnie Mae and continue to be successful with Ginnie Mae. Some of the things we'll look at to start are just common challenges of being a Ginnie deliverer. We'll skip into the approval requirements and actually what you need to be a Ginnie servicer. We'll go through a bit of the application process, some of the delivery process. We'll talk about the Ginnie portal. We'll talk about Ginnie Net. We'll talk about the Ginnie manual. And then obviously I'm going to try and include some tips and tricks that you guys can kind of use to avoid many common mistakes. The next slide is going to go right into our common challenges. David, you got the next one? Okay, so there we go. Obviously, Ginnie Mae is going to have a greater risk just overall. They treat the environment and the process completely different than a typical aggregator or Fannie and Freddie. You are basically responsible for deciphering exactly what the manual and the code says, and you're responsible for following up on it. So you do not have any hand-holding. If you start a trend or create a mistake, you usually find out when it's all said and done, and you have to do a scratch and dent type loan. So there's just overall greater procedural risk to the Ginnie Mae process. It will require additional staffing. Staffing requirements, when I talk about staffing, are going to be more of a procedural or production type. So an underwriter, a post-closing group, a servicing or a sub-servicing group. Even if you do have a sub-servicer or a current sub-servicer, you will probably need to expand your in-house operations in regards to that. There will be obviously upfront costs to doing this. So you do have to purchase things like commitment authority. You do have to have, obviously your errors and omissions and stuff like that in place. So there are going to be greater upfront costs to the whole process. There are definitely nuanced servicing rules. So you're going into a world of scheduled, and away from a world of actual scheduled or actual actuals. So it's going to be a completely different setup as far as servicing, as far as collecting, as far as having cash or reserves on hand to cover certain payments. So you will see a new set of servicing rules that you will need to definitely know hand and through. There's definitely going to be obviously a greater risk for early default. As a lot of you know, there's going to be a lower credit profile on some of these loans. There's going to be obviously the higher LTV. So you will run into obviously a higher number of defaults. The actual approval process for Ginnie Mae is definitely longer than your standard Fannie, Freddie, or aggregator process. So be prepared for it to take time. I know a lot of times people really want to push the product and get it out, but you've got to know that from time to start to finish is going to be about a year. And then, like I said, just overall greater time is going to be spent. You've got to learn, you've got to be prepared. They're going to ask for you to have people on staff before you even or during the approval. So you need these people on staff before you even receive your approval. It's just a very different environment. Like I said, there's not much hand-holding. A lot of people don't realize that I think there's something like 120 employees at the entire Ginnie Mae center in Washington, D.C., and they cover the entire nation. So you're not necessarily going to get an AE that you can call offhand or that you can talk to or that you can take out for the conferences. You'll more likely get somebody that will repeat exactly what's in the guide. So if you do have a question, that's typically what you expect as an answer. If we want to go to the next slide, we can get into some of the other topics. So these are just straight net worth approval requirements. There are no exceptions to this. They are going to force you to be at these minimums for the entire length of your process. If you go below, they will shut you off and it will be immediate. So they're not really going to care where your loans are in as far as production. They will cut you off until you remedy the situation. And usually when they cut you off, it's fairly immediate and it's with an exact explanation, so you at least know what to remedy. Most people, when they initially apply with Ginnie, are going to look at the single family program. Manufactured housing tends to be the next one, even though it's got the highest, obviously, minimum net requirement. That tends to be the next one. And then eventually multifamily. Multifamily, the reason they're usually third as far as an addition is multifamily does take a bit of an advanced underwrite and does take some more time to ensure a quality loan. So that's usually why it gets added later. And then reverse mortgages or HECMs are usually the final program that somebody offers. And many times, most people do not get that actual program set up. So again, you have to keep these minimum net worths. There is no exception to these, and you will be expected to prove that you have these throughout your entire relationship with Ginnie Mae. If you want to go to the next slide. So here we're going to go ahead and talk about just basic prerequisites. Obviously, there's the net worth that we just went over. They will want at least a Fannie or a Freddie approval. Both will be preferred, and you will look better on your application should you have both. It will take also a reevaluation of your production process. So you will need to have policies and procedures documented in place ahead of your submission. So you will need to get to know your production line from underwriting all the way through to post-closing. You will need to ensure that you have third-party vendors set up and ready to go. So as far as custodians, as far as sub-servicers, as far as custodial banks, any legal teams you guys might need, definitely going to have to require getting that set up prior to your Ginnie Mae submission. If you do not have that set up, it will slow down the process. The Ginnie checklist is rather invaluable. It actually is a good way to go through. They actually supply it to you when you initially set up an application. It's a good way to follow their process and ensure that you're submitting the most accurate package, because any error will cause, again, significant delays. So the checklist is vital when going through your, or just opening kind of checklist internally to see what you need and how to get to the final application. Third-party vendors, again, are going to be huge. These are things like document custodians. Obviously, there's an approved list. I would say, just in my experience, everybody does have a favorite or a preferred, but they all tend to follow the same rules. So it is incumbent on you guys to decide who's got the best setup to handle Ginnie Mae. It may require you guys switching. It may require more advanced processes or more advanced conversations, monthly calls with your document custodian. TBA dealers, you want to ensure that you've got TBA dealers that specialize in Ginnie Mae. Obviously, you're going to be putting these out to bid and selling these pools yourself. You want to make sure that you're getting the best price out there and that you're using a dealer that is actually set up to bid and be aggressive in the Ginnie Mae space. Subservice is obviously a huge thing. It's very similar to your document custodian. I think everybody does establish a favorite, but again, they all have to follow very similar rules. So if you're looking for one or trying to evaluate the one that you have now to see if they fit for Ginnie Mae, just know they're going to follow the same set, and it's more about the dynamic between your company and them and the business process. It's the important part of this. Once you get comfortable and down the line, you can obviously get into the game of who's got better fees and kind of get there on that route. And I've done that, but in the end, it's very difficult to switch, and you tend to stay with the person that you start this whole relationship with. Always have a contingency plan. So scratch and dent broker, or so MCT obviously has something in-house that we offer. There are other brokers out there, but I would establish a relationship up front in case you do happen to have a loan that goes scratch and dent. It can mean the difference between 10 and 20 basis points on a loan if you get the right scratch and dent investor. So it is vital to get at least some sort of pool of possible scratch and dent brokers in place. And then obviously internally or externally, outside or inside counsel is obviously definitely recommended. There are going to be rules and regulations in the manual that are up to you guys to interpret. And so it's how you interpret the guide. And sometimes that doesn't necessarily jive with what Ginnie Mae intended. And that definitely helps to have some sort of legal counsel either upfront when you're creating documents and guidelines, or at least there should you have to essentially define why or how you interpreted the rules that were laid out. If you want to go to the next slide. Again, from a business operational point, this is the type of stuff they're going to want ahead of your package or with your package. So it's vital to have this in place. I wouldn't say it has to be significant, but they're definitely going to want to see it. So you're going to have to spend time in each department and really regulate and kind of define what they do, especially in cases of when you go live with Ginnie. So a good quality control plan is always something that should be in place. You definitely need to ensure that you're FHA approved, which is different than Ginnie approval. If you guys have questions, we can answer that and then show you guys how to get approved there. But most of you are already, so that shouldn't be too hard. You definitely have to have your document custodian. Again, if you got Fannie and Freddie delivery, you have that already, but you should double check to ensure that they're able to handle and help with Ginnie Mae delivery. They're going to be a very valuable partner in this whole process. Their timing is going to dictate how fast you get your wire. The cleaner and easier you can handle a document custodian, the smoother and more seamless this whole process will work. You will have to demonstrate. So when I say demonstrate, they will want actual resumes for these people. They will have to have required work history type information on there, and they're going to want them to be in a management capacity. So for instance, at the company I worked for, we actually did have to go essentially poach an underwriting manager with the skills that were required and put her on staff for 3 months before we could actually continue and complete the Ginnie Mae approval process. So there are little weird caveats like that you guys might have to go through on several of these steps. Proper P&L, escrow, and custodial accounts. This is big time into servicing. This is where your sub-servicer is going to come into play. So you should get them on the phone and establish these accounts and ensure that they are set up to operate under a Ginnie Mae format and not just Fannie Freddie. There will be differences. Again, I highly suggest creating your own internal servicing team and use them as either a bridge or a gap to your sub-servicing team. Usually Ginnie Mae requires some sort of on-site audit of your sub-servicer, so be prepared to at least on a yearly basis audit your sub-servicer on-site. Fidelity bond and mortgage heirs insurance policies. These you might have an effect already, but obviously they will increase with the addition of Ginnie Mae. You just have to ensure that you're keeping the minimum and maximum and ensure that there's no gap. Any gap will immediately shut down production. Again, Ginnie's very different. They will halt production and essentially tell the custodian not to certify loans if you're out of compliance with several of these topics. If you want to go to the next slide, Dave. Continue with some of the operational requirements. You're going to have to obviously hold the securities and keep the securities. So this is where we talk about what's called a custodial bank. If you guys are intending to sell these securities on a best X platform with multiple dealers bidding on your pool to get the highest execution, setting up a custodial bank is going to be key. This can be done through a warehouse line. It can be done internally by a bank, or it can be done through a couple of the TBA dealers. For instance, Multibank has a really great program, and it's basically termed a repo line is the way they phrase it, but it allows you to facilitate the holding of your securities in a safe manner with third-party verification. And it also allows you guys to be able to bid out your securities so you're not stuck delivering to one or two dealers. This will get you the optimal price. So ensure you do the research on how you're holding securities, how they're getting delivered, and the final process on receiving your wire and purchase advice. So the next step is servicing the mortgages and contracting with the bureaus. So obviously this is kind of back to sub-servicing. It's a very detailed process. You will have a difference between, as you'll see in the next bullet, some Ginnie Mae 1 and 2. So a Ginnie Mae 1 is any note rate delivered at a half security. So for instance, if your coupon is a 2.5 coupon, you would have nothing but 3% note rates in that pool. Sometimes in a market, there's an extra pay up for that, but there's also different steps and processes on how to get those pools uploaded and delivered. So you will need to know how to administer that process, ensure that you're delivering between a Ginnie 1 and a Ginnie 2, or you will not receive your proper pay ups. A Ginnie Mae 2, obviously that's going to accept all your other note rates. So in traditional form, very similar to Fannie Mae, but a little bit different. They only let you go at 0.875. So for instance, if you have a 4 coupon, you can deliver 4.25 up to 4.25, up to 5 3/8. So they kind of shorten the length of what you're allowed to deliver into your Ginnie 2 coupon. So just know that you understand the difference between them and the differences of how to deliver them.
Yeah, and Brett, real quick, just to chime in on that, another difference that we're definitely seeing, not to sidetrack the conversation, between the difference of Ginnie 1 and Ginnie 2 is also the custom pools that a lot of lenders are creating for the spec low bow payups. So those are going to be a different process, like Brett was talking about. Whether you're pulling that up as a spec low bow pool or a custom pool, or if you're going the Ginnie 2 route into a major pool. So those are two separate processes. So
that's great. No, that's actually a great point, and I'm glad you brought it up because I was possibly going to skip it. But yeah, this is where you start to deal with what Andrew said is the specified pools and really start honing in some pay-ups for low balance in certain programs. Again, there's different rules and regulations on how to administer pooling, how to deliver, and how to ensure you're receiving your pay-up from your dealer. So you'll want to ensure that capital markets is aware of how that process works, if there's anything operationally you need to do different, and then ensure that you're delivering it properly. So I thank you, Andrew. I appreciate that. And then, the next one kind of falls into this realm of risk. So again, you guys are going to have to cover shortfalls on the servicing side. So for instance, we're kind of talking different delivery from Fannie and Freddie and different servicing as far as receiving monthly payments from your borrowers. Should there be a shortfall, you're going to have to come up with that, and you're going to have the funds to cover that. So there's an aspect here that you need to really sit down with your sub-servicer and ensure that they're catching this information and properly reporting it to you. I have seen instances where it's not properly reported, it's missed, and you have one loan causing your entire production to either slow or halt because somebody missed a payment or a report between you and your sub-servicer. Finally, quarterly, monthly, and yearly reports. Ginnie Mae is somewhat report-centric, so they expect you to document your performance throughout the year. They expect you to submit it on time. They're not going to reach out to you and ask, hey, where's that report, or can you send that report? You've got time frames that you have to deliver that report by. You have to submit it via online, and you have to ensure that it includes everything that they require. If you do not submit the reports, or you do not submit certain parts of the report or invalid information, again, Ginnie Mae will just halt your servicing or halt your production. So there is no warning. There's usually no slap of the wrist. It's usually rectify this situation immediately, and it requires oftentimes senior management getting on the phone and having to do a lot of running around and just overall stressful type days. So ensure that you're doing this reporting because they will not point it out. It is up to you to ensure that you're meeting the guidelines, that you've met all the marks, and that you're reporting all of that properly. If you want to go to the next slide. This is quick. Obviously, the fidelity insurance and the errors and omissions insurance. The reason it's on here is because, again, you will have to have this insurance in place. We'll go over kind of some of the figures. You'll see it's actually can be pretty costly to keep it in place. Any gaps, again, or any transitions will be highly documented. So it is something that people tend to forget about or not necessarily treat as important as some of the other steps in this process. But basically, you will have to have this in place. Ensure that you've got a carrier that is used to Ginnie Mae type deliveries and can handle what you're asking for. On the next slide, we can kind of go over some of the figures because there are requirements. If you want to go to the next slide, yeah. So for instance, it's kind of worded weird, and next time I'll make sure to set this up a little bit better. But essentially, there's going to be your minimum coverage amount and then a max deductible amount. So for instance, if you're doing $100 million or less, they're going to ask for at least minimum coverage of the 300,000 higher of 10%, and then $100,000 for your max deductible. On the second group, obviously, you're looking at $300,000 plus 15% of your portfolio. So obviously, depending on how much business you're doing or how much you're servicing, that number will increase over time. And then again, for the max deductible on that, you're looking at 10% or 100,000, and they're going to make you do the higher of. So we can go into more detail, or I can supply some of the calculations for you guys offline on this one. But just know the more you do as far as business and production and the more you're servicing, the more expensive it's going to be for you to continue that. If you want to go to the next slide, David. Here's your basic application fees. So they're going to have this all up front. The commitment authority is the big one here, and we'll talk about it a little bit later. Commitment authority, you have to purchase your commitment authority, and commitment authority is essentially the amount you're allowed to commit to Ginnie Mae over a given time. So they ask that you usually request in chunks of quarterly production. So for instance, if you average $300 million in a quarter, you're basically going to purchase $300 million worth of capacity from Ginnie Mae. And then it's on you as you run close to that number to go ahead and reapply. And depending on what your production is, whether it's increase or decrease, you reapply for that commitment authority, and they immediately debit your account for that money. So the calculations listed here, it can be expensive. I'll also tell you that they can regulate you on this. So for instance, our production, due to some of the things we were doing and how we were growing, expanded too quick for Ginnie Mae. So when I went to ask for X number of commitment authority, they actually denied it and actually made me reduce it and slow my production down because we were actually moving too fast. Now, eventually I got out of that little trouble world, but they do actually regulate how much commitment authority you can issue. So be prepared. Again, it's on you to request this. So I have been the person that has actually forgotten to request the commitment authority, and it was not a good thing, and it did not end well. So just ensure that you have somebody tracking that commitment authority and that you're watching the volume and that number as it decreases and gets to a point where you need to request it. Know that it might take a couple weeks for it to go through, and that you can't produce without that number being increased. If you want to go to the next slide, David. This is just a simple kind of matrix of how the process works. So again, you've probably spent a few months preparing for it. Once you finally submit it, it's going to go into their actual portal. You will have to email and mail in forms. There are going to be a ton of forms. A lot of them have to be signed by third-party vendors. So you're going to have to sign it yourself, send it to your third-party vendor for them to sign officially, have it sent back, and then mail in the form. So just be prepared to do a lot of mailing and filling and triple checking of forms. If any form is incorrect, they'll actually accept it or deny it. But sometimes if they accept it and it's incorrect, you don't find that out until everything's kind of hit the fan and everything's stopped. So just be prepared to, again, make sure your forms are correct. Ginnie Mae is not going to hold your hand. If it's incorrect, they will simply tell you no and redo it. If it's incorrect but somehow fits through their system, then you've got, a potential wire going somewhere it couldn't. So just ensure you're doing the right forms for the right departments and that everything's triple checked as far as signatures. Assuming you guys submit something quality and everything's good and you dotted your I's and crossed your T's, they shouldn't follow up with too much supporting documentation. We spent a lot of time preparing for that, and to be honest, the supporting documentation that we got as a request was far less, and it was smaller than we thought. So please ensure that you spend the time putting this together because it will make the process faster. And then finally, they will notify you of a hard decision and issue your number, or they will tell you that you did not qualify. They will lay out the reasons you didn't, and you will be given essentially a certain time a minimum time in which you cannot reapply. And then once that's up, you can reapply and hope that you redotted and recrossed those T's, and they'll let you resubmit. You want to go to the next slide? So again, this is just kind of the continue. They will either assign you a number and all of a sudden you can hit the ground running, which at that point, usually the salespeople are already salivating at the bit. So you can go and you can go as quick as you can possibly go. Otherwise, again, they'll give you the reason for the rejection and they will tell you a minimum time frame in which you cannot apply. And then once that is done, you can go ahead and reapply and go through the process again. So some of the policy or just process differences is, again, Ginnie writes a policy and procedure in a way that's a very manual form. So it's when I say manual, it's very long form. There's several chapters. Again, it's written in a way that leaves you guys open to interpret their rules. So be careful on that. You could think you're doing something the right way and have 10 or $20 million worth of loans in production. Only to find out that's not what Ginnie Mae actually wanted. And here you are going to be with loans that you don't know necessarily how to get rid of. So just remember that everything's open to your interpretation. It helps to reach out to fellow coworkers, fellow competitors, fellow companies to get an idea of how they've dealt with stuff in the past. Again, this kind of goes into the whole, just their flexibility is so open for interpretation. I mean, aggregators obviously have more skin in the game. Fannie and Freddie have more skin in the game. So their policies, procedures, and guidelines are very defined. It's almost difficult to break a loan in that world. In the Ginnie Mae world, they allow for flexibility. They want you to be able to use creativity to ensure borrowers are getting loans. It's the government, right? It's their way to reach out to the borrowers. So you're going to have flexibility that you did not see before. Obviously, in the right market, that allows you guys to do a lot of good and a lot of volume. Just know that with that volume is going to come an inherent risk that does not exist in the aggregator or Fannie Freddie delivery worlds. A missed guideline on this side is definitely going to be a scratch and dent type loan with no exceptions. You can't get a price hit for an exception. You can't squeeze it in. It's just going to be a true scratch and dent loan with no home. We're going to go over the Ginnie portal, Ginnie Net, and the Ginnie manual pretty quickly because I know we're getting close on time, but we're going to kind of go through some of the delivery process, over the next couple slides and kind of dig into the actual mechanics of how to physically deliver to Ginnie Mae. So again, on the next couple slides, we'll look at actual loan process deliveries and kind of some of the quirks that you'll see on an individual loan basis. So the Ginnie portal, this is essentially where you tell Ginnie Mae how your company is doing, and it's a very company-oriented process. So this is where you're going to be submitting your applications for approvals with third-party vendors. This is going to be where you're submitting quarterly reports. This is going to be where you're submitting any sort of documentation for your commitment authority or pool numbers. So this is kind of the company maintenance of Ginnie Mae. You will set up your company profile. It will require, I think, at least 2 or 3 times a year. You kind of got to go in there and ensure your profile is updated as far as addresses and ensure everything's tied out. You will do all of your essentially website security administration through here. So this is where you're going to be setting up individual users for access to certain systems. They will get, I don't know how to explain them. I'm so old school, but basically we call them keys. So they're little keypads that have numbers. So they call them tokens. But essentially you're going to have employees responsible for tokens, and you cannot proceed with certain submissions or certain loan processes without that token and without that employee. So ensure that you're setting up who has access and how you're tracking that in a very, very strict manner. Make sure that keys are on site at an office. If somebody needs to go off site and they're responsible for a process, either ensure they have their key and it makes its way back, or ensure that you have a process on site for that person to leave. Because again, it will require these keys. You can literally not produce loans without some of these keys. So this is a big portion of what people forget and skip. And this is going to be all housed in the portal. Ginnie announcements are also here. So I think everybody's kind of used to the emails that come over with a big Fannie announcement or a big Wells Fargo announcement. It's kind of a marketing thing and they send it across. That's not how Ginnie Mae works. They actually distribute announcements through this portal. Announcements may be specific to your company. So you've got to check these announcements. They might not just be a whole Ginnie name announcement with a global update. They might be sending you announcements specific to you, and they're going to come through here, and there won't be any notification unless you have an employee checking your essential inbox on a daily or weekly basis. If you want to go to the next slide. The biggest mistakes in the portal are, first and foremost, people not staying active in it. So you might have employees or people that check it for the first month or two, and then it gets redundant because something might not have happened or there was no change, and they will either stop checking entirely or reduce the amount of times they check. That's bad. So ensure that somebody's in here checking at all times to see if there's any sort of announcement or change within the company that needs to be updated in the system. So always ensure that your Ginnie Mae profile is up to date. They're going to use it to tie out your quarterly and monthly reporting. It will be part of the audit process. Commitment authority. We talked about this a little earlier. Again, they will kind of determine the level of commitment authority you're allowed to do. So essentially the maximum amount of production you do on a quarterly basis. They will be able to kind of determine that. Over time, obviously, you'll get a groove and get comfortable, and they'll allow for expansion. But again, I've watched many times where you run up too close to the commitment authority. They might not want to give you more commitment authority and you're out. In that case, you literally have to stop slow production. It can kind of get embarrassing because it sounds like such a little thing. So when you're explaining that to sales folk, or you're kind of telling everybody why you have to slow everything down, and it sounds so meaning and trivial. Again, commitment authority is a very big thing. So ensure you're tracking it. Ensure you know on a daily basis how much is outstanding, how much your typical approval length is, and when to apply. Vendor agreements are also done through here. So they will ask for updated vendor agreements throughout the year. Make sure that everything on there is updated. Again, it'll probably require signatures from both sides and both parties. So please ensure that you take the time to ensure they're properly filled out and that they're actually getting handled. And that kind of goes into the next kind of bullet point, which is with your third-party vendors, I highly recommend establishing monthly calls in which your management is talking to their management and ensuring your process flow is working. I mean, even if the monthly call is just to say, hi, how's the weather over there? At least it's getting established and at least it's done. You really want to stay on top of these vendors because they will be vital in how quick you get loan from fund to wire into your bank account. Security offers and tokens, again, ensure that you're setting people up staff-wise to account for sick days. Make sure that they have the proper authority and that they can submit the proper paperwork, or else you're just going to hold up production. Announcements, again, make sure you're looking at those. They will come over randomly. I have missed announcements that I was not aware of. And when my commitment authority essentially was halted, it was kind of a scramble to figure out how they even announced it. So just make sure you're checking this portal on a frequent basis and with consistency. The Ginnie support staff is helpful. They can actually get you to places that you need to be. So don't be afraid to reach out. Again, they're very limited. They actually contract through Bank of New York. So sometimes you're actually talking to the Bank of New York, but they actually announce themselves as Ginnie Mae. So just realize that they do contract some of their work through Bank of New York Mellon, and you will be required to work with Bank of New York Mellon to ensure your Ginnie approval or your process is working properly. If you want to go to the next slide. Okay, so the manual is kind of what I tried to cut into here. It's online. It's, I want to say, 26 something chapters. Again, it's kind of vague. It can be hard to decipher exactly what they're asking for or exactly how you're supposed to essentially write your guidelines. But this is where you guys are going to find all of your documents set up. So any Ginnie specific documents, for instance, Ginnie Mae ARMs, require a different set of documents that your doc vendor will have to either have on site or create for you. That information can be found here. A lot of your third-party vendor forms and processes of how to set somebody up are going to be found in here. The website also houses a lot of pertinent information in regards to delivery dates. So they will have your cutoff period. There is a cutoff period at Ginnie Mae. It's called the blackout period. So you actually cannot receive wires on loans for the last several days of each month. Obviously, that's not good timing because you usually have payroll due the first week of the next month. Those dates can be found here. It also houses all of your QSIP numbers, which are used for trading. So you will be accessing this website rather frequently if you're trading in volume. You will need the dates and you will need the QSIP numbers. This is also where they house the internal guidelines. So this is essentially where you're going to create your own guidelines. Obviously, there's a million ways to create guidelines, and I don't want to give you guys necessarily one way or the other. But in the end, this is where you will do any sort of guideline check or follow-up. So no matter what you have prepared, you're going to use this to either ensure you've done it right or correct what you have in place. So your underwriting guidelines are going to be housed in the Ginnie manual. This is also where the help desk from Ginnie Mae spends most of their time and has most of their expertise. So they are not too well versed in GNMA or the portal, essentially the website functions, but they are very well versed in the manual. It's almost scary how well they can quote it. I think they might have photographic memories, but ensure that you use the Ginnie Mae help desk to guide you through the manual as you guys are creating your guidelines. So GinnieNet is, let's see, wait, oh, sorry. This is kind of just a follow-up on the manual. Again, it's incomplete forms. You'll see a common theme here. It's on you guys to ensure the forms are filled out properly and everything's in place. Ginnie Mae will not hold your hand on this at all. Any sort of vendor setup that's not done, any sort of documentation that's out of place, they're going to typically just kind of let it go through and you kind of find out the hard way at the very end of everything that you have a loan or loans that are unsellable. So ensure that you're keeping up to speed on all your forms and all your vendor setups. As far as the manual, and the tables and dates are going to be vital. Again, we kind of went over that. make sure that somebody's in there and that you guys are following up on the dates as far as the blackout period. Having a loan not certified or a pool not certified ahead of the blackout period is possibly one of the most frustrating things. So make sure that you're very strict and very orderly about your delivery periods and how to treat pools as far as delivering into this month and then setting up the following month to ensure that there's only minimal disruption to wires coming in. And then finally, obviously the Ginnie manual, which again, I won't get too much into because this is kind of capital markets, but this is where your guidelines are housed. So understanding, interpreting, and properly putting guidelines out to the public is going to be crucial. That's where you're going to probably need to spend your most time ensuring that you have the staff that understands how to do this process and can essentially translate what Ginnie Mae and what you want to a proper guideline that creates a fundable loan. The next slide, we're going to go over the actual Ginnie Net. So this is the loan database for Ginnie Mae. This is where your employees are going to do all of their work to ensure that the loan data ties out to the documents that are being sent to your custodian and ensure that they are getting certified. It is a very archaic system. It is usable in several ways. Manually is terrible and painful. I highly suggest getting somebody from an IT standpoint to ensure that you're doing everything from an uploadable or automated fashion when dealing with Ginnie Net. Spend extra time on it and make sure that the information that is being uploaded is accurate or consistent, because it can get certified initially, but at final certification, when trailing docs are getting compared, you might run into issues as far as what's uploaded in the system and what hasn't been. So you could receive a wire, but not final certification. Just be careful on what is being uploaded and ensure that your LOS is properly talking to Ginnie Net. In Ginnie Net, again, this is where you're going to be entering all your loan data. So you're going to be creating individual pools. You're going to be uploading individual loans to those pools. You will be ensuring the data is correct. So if there are any errors, it will tell you in this system that you do not have the correct information and here's what needs to be fixed or remedied to allow for the loan to go ahead and purchase. You're also going to be creating several forms out of this system that are going to be used in your delivery process to the custodian to ensure that the note gets certified. So you will be pulling forms out of this system. Again, it's very archaic. So ensure that you have somebody from an IT perspective that can help your employees on a day-to-day basis automate as much of this as they possibly can. So this is Ginnie Net. Again, if some of the mistakes on this are from a full, if you want to go to the next slide, David. Just an underdeveloped policy and procedure on how to upload, how other employees are able to ensure there's training so that there's multiple employees that know how to upload. Ensure that you have a great process in place with the loan delivery and actual figures going into their system. Once you have that in place, again, this is where the document custodian is going to come into play, because they're going to be pulling this information out of Ginnie Net to compare to your actual physical documents. Make sure that process is there and it's working. We talked about it a little bit, but a clearing bank. So again, if you want to be able to best X your loans and get the best price for your pools, establish a clearing bank. There are several ways to do it. I mentioned a couple, but not having a clearing bank will definitely keep profits down. It is not a good thing. The TXT file upload, again, this is along the lines of automation. Ensure that you're uploading. I spent years manually doing it. I literally had a staff of just data entry people because I did not have the proper IT department. And it was night and day, as in, like, I had to reestablish and figure out how to take a group of people that were hardworking and ensure that they still had jobs, because it went from hours of manual work to instant upload. Luckily, those people were very smart and had the GNMA expertise. So I was able to kind of move them from a upfront position to a more kind of back end position where they were double checking the work and making sure that everything was being uploaded properly, that the right field was tying to the right LOS field, that it was tying to the right servicer report that goes out. So again, just make sure you guys have expertise and you're very automated with how you treat GinnieNet itself. If you want to go to the next slide, David. Well, I kind of went over some of this, but yeah, the IT, not documenting policies and procedures, not storing your forms. This is another big thing. So I can't tell you how many times I've run into the final certification after we've received our money. Somebody coming back and asking for a form that I didn't know we either needed or didn't save, and you have to go back into the system and try to recreate the form, and that oftentimes is a pain in the rear and will definitely cause delays on either initial or final certification. You want to go to the next slide, Mark, Dave? So I think this is just kind of, we're getting close to summing this all up. Be very detail oriented with this whole process. It is a different beast than what you guys are used to. It's going to require, again, some internal evaluation and possibly redoing of what you've been successful at, and not necessarily redoing, but maybe adding to it, right? So just know that you guys are going to have to revamp some of the things that have made you successful to this point and allowed you to get Ginnie Mae approval. You got to make sure everything's detail oriented. A fat finger mistake can lead to, a scratch and dent load going out at a price of 70 or 60. You just don't want to run into that situation over something that could be so trivial. Third-party vendors, I think, are very important in this whole situation. Again, they are literally determining how quick you can get, a loan purchased. So ensuring that you have the right dealers, ensuring that you have the right servicers or sub-servicers, ensuring that you have the right document custodian. You guys might have current and awesome relationships with some of these guys, but they might not be able to best provide you with the service you need to deliver to Ginnie. If that's the case, maybe you just open up a Ginnie only with another vendor, or maybe you look at switching, or maybe, you work with these guys and who you have and kind of develop something that works for you. But the third party vendors are what you're going to rely on. There's nothing more frustrating finding out that a pool didn't get certified before the blackout, and it was because of a lack of communication with a third party vendor so that you didn't even have control over it. Make sure they're vetted. Make sure that even if you have a current awesome situation with that person, that you're advancing it and you're getting detailed and you're spending more time on this Ginnie process. I think operations obviously is going to be huge in this. As I alluded to before, Ginnie may require you to actually hire somebody and have them on staff before you get the approval. So make sure that you've got underwriters in place, doc drawers in place, funders in place that know how to ensure that interest calculations are being made properly. Make sure you have the operational people with experience in place ahead of time so that they already know your system and they're familiar with your system by the time you guys are rolling out for production. Communication is key. I think just consistent meetings with your vendors or with your internal department staffs is going to be huge. The more you guys talk, the better. And again, you got to hold to it, because there's going to be times where there'll be a lull and you'll go 2 or 3 meetings without any problems. And all of a sudden that 5th meeting that you guys skipped is the one you needed to have, because then now there's a problem, right? So don't look back at it as we should have had those meetings. Have the meetings, and if they're nice and easy, great. Everybody gets 20 minutes of their life back. If needed, then you could be saving, again, huge amounts of time, effort, and money by just talking. There will be mistakes. This is kind of how I treated this whole layout and process. Is I'm not an expert in this by any means, but I've literally made every mistake you can make at Ginnie Mae. I kind of brag about it. I'm not sure if I'm supposed to be proud of it, but I mean, I messed up a loan so bad that Ginnie Mae actually had to change their guidelines, which means like they actually had to change law. So you can actually really mess loans up. That will happen. You got to be able to handle it. So make sure that you've got reserves, or you've got legal counsel, or you've got scratch and dent, or just anticipate a mistake in which you might be going back to a borrower and redoing a loan to do it properly. So mistakes will happen. They're impossible to avoid. It's all about how you clean up the mistake, how you address it, and then how you prevent it going forward. So, I mean, in summary, I mean, it's scary. It's a lot of work. I'm truly hoping this manual just gives you guys at least a reference point that you can kind of talk amongst yourselves, communicate, share ideas. I know the overall process is super intimidating. It's hard to kind of dig your way through. We're going to be releasing some white papers in regards to this that go into a bit more detail of kind of what I've overviewed here. So we're going to release materials that actually get into some of the nitty gritty. I'd love to answer questions. I kind of love talking about this stuff. It's why I wrote this, just to kind of help out the community when they're looking for Ginnie Mae. I see it from our end. There's a lot of clients that just don't necessarily understand or know where to begin. And this is hopefully a starting spot that you guys can make some educated decisions and choose whether Ginnie's right for you. And if it is right for you, what milestones you have reached or may need to reach to ensure you guys get through the approval process, understand how to deal with them from the differences that you're used to with aggregators and Fannie and Freddie. But just in general, it's again a different beast. And I want to just kind of give everybody some knowledge on how they could possibly deal with it and get a good starting point.
Yeah, no, Brett, that's awesome, man. That was definitely a good overview on kind of just the whole Ginnie application and kind of delivery process. We've had a couple questions come through, and I've been trying to kind of just answer them on the background. But one that did come up that I thought was kind of interesting was, a guy asked, like with Fannie and Freddie, if you could be a seller but not a servicer. Is there, can you still do that, or can you do that with Ginnie?
Okay, so it is possible, but in a market like this, the servicers have somewhat backed out. So, for instance, there's a process called the PIT process. It's PIIT, and you can sell servicing on a monthly basis. So it's not daily, it's monthly. So essentially what you're doing is accumulating loans throughout a month. You have to hold them in your servicing portfolio for the first payment, essentially. So you have to still do all the upfront initial servicing regulatory stuff. And then at the end of the month, you can send a tape and move the loans over, and they will pay you one bulk amount. So there's places like Lakeview, Bayview that were doing it. Pingora back in the day is someone that does that. So yeah, there is a process in which you can sell the servicing, but it's monthly or quarterly. It's not by individual loan or like kind of whenever you want. It's got to be done on a monthly basis.
So simply there's no cash window with Ginnie. There's no way you could sell Ginnie,
Correct.
A loan. Ginnie is not the investor per se. Ginnie is the entity that is securitizing the loans into a pool, and then you guys are taking that pool and selling that pool to the market.
Yeah, it's essentially our taxpayer money backing these loans. Basically, it's the government backing these loans. All they're doing is just kind of a backstop in case the loan goes bad. All the transactions are actually handled through your document custodian, your TBA dealer, and your servicer, and it all is housed in your world.
Right. And there's some other questions, but I think to be respectful of everybody's time, we're at the top of the hour. I'll try to get back to these questions, and I'll reach out to all these people that asked them, and then I'll get with Brett, and we'll definitely get back to you guys on those questions. But yeah, Brett, I think it was
Yeah, and
Definitely.
guys, again, like my contact information is there, my email. Feel free to reach out to me directly. Like I said, I kind of like talking about this stuff. I did come back to the industry kind of with a different perspective, and I enjoy helping everybody here. So, again, I've made all the mistakes. By no means am I the expert, but it's something I can at least guide you guys in the right direction with your questions. So feel free to ask away.
All right. Well, with that, I think we're going to end it. So thank you guys for your time. And yeah, hit us up if you guys have any questions.
Thank you.